Your paycheck could get smaller in 2026, even if your salary never changes. And the scary part is, you might not notice exactly where the money went. For some Americans, more money could come out through Social Security taxes. For retirees, Medicare could take a bigger bite out of the monthly check. And if you're collecting Social Security while still working, there's another rule that could affect how much you actually receive. But here's the part you need to know. These changes don't affect everyone the same way. So before you assume your smaller check is a mistake, or worse, just accept it, let's break down the 2026 changes you need to watch, who they affect, and what you can check right now. And if you're over 50, already retired, receiving Social Security or Medicare, or simply trying to protect more of your paycheck, subscribe now. We break down complicated money and government changes into simple explanations, so you know what changed, whether it affects you, and what to do next. Your paycheck can look almost exactly the same on paper in 2026, while the amount of money you actually get to keep changes underneath it. And for some Americans, that difference could show up through Social Security taxes, Medicare deductions, or even Social Security benefits being withheld. The important part is that these aren't three brand new government programs suddenly appearing in 2026. They're existing rules with important 2026 adjustments, and one of them only affects certain workers. Another can directly reduce a Social Security payment, and the third can become especially important if you're collecting Social Security while still working. So before you assume a smaller check is simply a mistake, let's walk through what changed, who needs to pay attention, and what you can actually do about it. First, let's look at your paycheck. In 2026, the maximum amount of wages subject to Social Security tax increased from $176,100 in 2025 to $184,500. The Social Security tax rate for employees remains 6.2%. That means most workers won't suddenly see a new Social Security tax rate on every dollar they earn. But if you're a higher income worker, more of your wages can now fall inside the Social Security taxable range. Think about someone like Mike. Mike is 57 and works in Texas. He earns a salary high enough that he normally reaches the Social Security taxable maximum during the year. Mike looks at his paycheck and notices that Social Security withholding continues for longer before he reaches that annual limit. Nothing about his job changed. His salary didn't suddenly get cut. But the amount available for everything else in his paycheck can be affected because the 2026 taxable maximum is higher. For someone earning below the taxable maximum, this particular change may not make a noticeable difference. That's the important distinction. This isn't a universal paycheck cut. It's a 2026 adjustment that matters much more if your earnings are high enough to reach the Social Security wage base. And there is another detail people sometimes miss. Medicare tax doesn't have the same wage ceiling. Medicare tax generally applies to all covered wages, while the Social Security portion has the annual wage base. So if you open your paycheck and see a deduction you don't recognize, don't just look at the total. Look at the individual lines. Social Security, Medicare, federal income tax, other deductions. Knowing which line changed can tell you much more than simply looking at your final take-home amount. And if you want more videos that break down complicated money rules into simple steps, that's exactly what this channel is here to do. Now let's move to the second change, because this one can hit a completely different group of Americans. You're retired, you're receiving Social Security, you're on Medicare, and you were expecting your monthly payment to give you a little more breathing room. Then you look at the amount that actually arrives. And it's not what you expected. One reason can be Medicare Part B. For 2026, the standard Medicare Part B premium is $202.90 per month, compared with $185 in 2025. That's an increase of $17.90 per month for someone paying the standard premium. That may not sound enormous. But Linda, a 68-year-old retiree in Ohio, sees money differently. For Linda, $17.90 every month isn't just a number. It's money that could have stayed in her checking account for groceries, utilities, transportation, or an emergency expense. And over a full year, that monthly difference adds up to $214.80. The important point is that Linda didn't necessarily make a mistake. Her Social Security benefit itself isn't necessarily being reduced because she did something wrong. Part of the change can come from the cost of Medicare coverage being deducted from her benefit. And the standard premium isn't the whole story. Some Medicare beneficiaries pay more depending on income. For 2026, the income-related Part B adjustments begin above $109,000 for individuals and above $218,000 for married couples filing jointly, with higher premiums at higher income levels. So if your Social Security payment seems smaller than expected, don't immediately assume Social Security reduced your benefit. Check the Medicare deduction. Look at your benefit statement. Compare the amount with the previous year's statement. And if your situation involves an income-related Medicare adjustment, verify the specific amount using Medicare or CMS information rather than relying on a social media post or a headline. Because sometimes the biggest financial mistake isn't paying the wrong amount. It's not understanding why the amount changed in the first place. And now we get to the third change. This one can surprise people because it involves something many retirees actually want to do. Keep working. Imagine Robert. He's 64, lives in Florida, has started receiving Social Security, and continues working because he doesn't feel ready to completely retire. Robert thinks, I'm receiving Social Security now, and I'm earning a paycheck too. That's my money. Why would one affect the other? That's where the Social Security earnings test matters. For 2026, if you're receiving Social Security before reaching full retirement age, the annual earnings limit is $24,480. For the year you reach full retirement age, the limit is $65,160, and the rule applies to earnings in the months before you reach full retirement age. Under the earnings test, Social Security says $1 in benefits can be withheld for every $2 in earnings above the applicable limit before full retirement age. In the year you reach full retirement age, the withholding formula changes to $1 in benefits for every $3 above the higher applicable limit. Once you reach full retirement age, there is no earnings limit. That doesn't necessarily mean the money has simply vanished forever. But it can mean your expected Social Security payments are different from what you thought they would be. And this is exactly why Robert shouldn't simply look at his bank account and panic. He needs to ask a more useful question. Am I subject to the earnings test, and how does it apply to my situation? That's a much better question than assuming Social Security made an unexplained mistake. The same principle applies to all three changes. Don't start with fear. Start with identification. Which deduction changed? Which income level applies to you? Are you still working? Have you reached full retirement age? Is Medicare being deducted from your Social Security payment? These details matter. And here's the payoff to the question we raised at the beginning. And three very different things to check. So before you assume your money has simply disappeared, here's your 5-step checklist. First, compare your latest paycheck or benefit statement with the previous one. Second, identify the exact line that changed. Third, if it's Social Security withholding, check whether your earnings are approaching the 2026 taxable maximum of $184,500. Fourth, if you're on Medicare, check your Part B deduction and whether an income-related adjustment applies to you. And fifth, if you're receiving Social Security while working, check the 2026 earnings test rules that apply to your age and situation. Then verify the details through official sources such as SSA.gov, Medicare.gov, CMS.gov, or IRS.gov. Because Mike didn't need to become a tax expert. Linda didn't need to become a Medicare expert. And Robert didn't need to memorize the entire Social Security handbook. They simply needed to know what changed, what line to look at, and what question to ask. That's the bigger lesson. You don't have to understand every government rule. You just need to recognize when something affects your money. Because the difference between ignoring a smaller check and understanding it can be the difference between frustration and control. So check your numbers. Know which rule applies to you. And never assume a change in your take-home money is something you just have to accept without first finding out why it happened. If this video helped you understand what to look for in 2026, subscribe for more straightforward updates that can help you keep more of your money and avoid expensive surprises.